Welcome to my $100,000 stock experiment, Sell Rules, week number 38, ending December 28th, 2018. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. My basic premise is I started April 13, 2018. I have $100,000 to invest. My goal is to double my money in 1 year. My focus is on practicing and developing my sell rules. I'm trying to learn and use the CAN-SLIM rules that focus on growth stock investing. I'm trading in my rollover Roth IRA, and I have free trades and no tax implications. I changed up my sell rules a little this week just for clarity. So my number one is to minimize my losses by setting a stop limit order at the floor. Initially, my floor is 8% below that purchase price, and I set a stop limit order at the time of purchase. As the stock moves up or the chart or market shows weakness, I go ahead and move that floor, and I'm revisiting that floor once a week. In evaluating my sell rules, I see that I have good sell rules for selling into weakness, but I need to work on my sell rules for selling into strength. So I'll be adding some more sell rules in the upcoming weeks. The market direction right now is market in correction, which according to the IBD investors.com means to not buy. We should be looking at the general market for a follow-through day, which should move the market into confirmed uptrend, which is another thing you can track on the IBD. In the meantime, you should be creating a watch list and looking at stocks that are ready to break out, so you're ready to go when the market moves into a confirmed uptrend. If you watch the general market, you'll see the NASDAQ chart. It had 3 up days at the end of last week. So this coming week could show a follow-through day. And I show those up days there with that number 1. The S&P 500 had 2 up days. And then on Friday, it was a down day that closed in the bottom part of the range, as well as the Dow Jones Industrial Average, 2 big up days. And then it closed towards the bottom of the range on Friday. My activity for week 38, I have no buys and I have no sells, which leaves me with just one stock. As you can see, this stock went up by 1.8%. My total gain is just about 5.5%. I've held this stock for 3 weeks, and like I said, it's up 5.7%. I had moved the floor up last week, and I'm going to go ahead and move the floor up again to the 20-day exponential moving average, which is that baby blue line, and that's going to put my floor right around my purchase price. So at worst, I would break even on this stock if it did start to fall. My benchmark shows that I went up about $180 from last week, so I'm currently at $113,000. That's up 13% since I started in April. Since it's the end of the year, I wanted to review my 3 biggest mistakes of 2018. Knowing your mistakes lets you take action to correct them. So while it may be painful to look at some of these, hopefully there is a lesson for me and you as well. I thought that my first biggest mistake was buying when the market was in correction, but what I found out my problem was that I was continuing to buy stocks after multiple failed buys. And this could be due to a poor buying strategy, which I need to develop, and also with the market having issues in general. I had a theory that the VIX, if I bought when the VIX was below a certain point, that I would have better trades. So I charted all of my purchases. So in the white is the purchase date of the stock, and then the symbol, and then the profit or loss. If it's a profit, it's in green. If it's a loss, it's in red. And then the condition of the market at the time of purchase. So my first purchase there is 413 VRNS, and the market was in an uptrend. And let's see, that price action bar right to the left of that white box is showing the day when I purchased that stock. So these are the purchases that I made in April. And then I looked at the stocks that I purchased in May and the ones that I purchased in June. And I continue on through July and August, which I had a few losses in here, but mostly gains. And then I get into September and you can see every trade fails. And I continue to buy even into October and every trade fails, and into November, and all except two trades fail and they were tiny gains. Continuing with November and into December, and you can see still losses. In preparing this VIX analysis, I had my spreadsheet that I highlighted with my losses and gains and uptrends and market under pressure and in correction. After September 17th, starting then, I had just sold my tandem stock. I had a lot of money to purchase stocks, so I bought a bunch of stocks, and the market was in an uptrend. And either I bought them at the wrong time or the market was just falling apart, but I started losing money and losing a lot of money there. I thought the analysis of where the VIX was at in relation to if my stock made a profit or not would show me that if I bought under a certain line for the VIX, that it would I would have profit, and if I bought when it was over that volatility amount, I would have a loss. But what it really showed me was if I have multiple trades that are failing, I need to take a step back and pause, evaluate my trades and see what's going wrong. Is it me? Is it the market? I know this is tiny and I don't expect you to be able to read these buys and sells, but this is a list of stocks that I purchased from September 17th to December 12th. I purchased a total of 41 stocks. 38 were losers. Astonishing. I had two tiny winners, and I still own a stock that I bought in December. If I had taken a break after my 4 September losses and not purchased any stocks, I would have saved almost $22,000. That would have been an additional 22% in my portfolio. Back to the three biggest mistakes. The continuing to buy stocks after multiple failed buys cost me, like I said, $22,000. My action here is to implement the 3-strike rule and take a break, pause after 3 failed purchases in a row. And I first heard about that 3-strike rule from Lee Tanner, and I also read about it in this Mark Minaveri book, that to take a break if you have several failed purchases. The second biggest mistake I'm going to look at is where I took losses of more than 10%. I wanted my floor to be at 8%, so I'm giving a little leeway here and giving an example with a 10% loss max rule. From May to September, I took more than a 10% loss on 7 stocks. If I would have kept my loss to 10%, that would have been just a $7,000 loss instead of $11,877 loss. That would have put about $5,000 or 5% back into my portfolio, a loss that shouldn't have happened. And the third biggest mistake that I made in 2018 was letting profit turn into a loss or a teeny tiny profit. I had 3 stocks where I had a really nice gain, and I let it to fall to either a teeny tiny profit or even to a loss. And that is a mistake that I don't want to make again. If I would have avoided the first 2 of my 3 biggest mistakes and not even taken into account mistake number 3, I would have had an additional $26,800 in my portfolio. That's 26%. I also want to look at my successes of 2018. The 3 things that impacted my trading the most all came out of the joint IBD meetups in the San Francisco Bay Area. There was one in April and one in November. I was inspired to start this YouTube series at the April IBD joint meetup. I also found what I call my trading partner at the November meetup. She lives in Oregon, and we have weekly calls where we discuss our watch list, historical chart patterns, and we do post analysis on some of our trades. I also am continuing to learn every day. I have online learning with other groups, webinars, videos, and I can also look at past recordings of previous meetups. And I'm doing reading, and I do learning on investors.com. One of the books I just read was Think and Trade Like a Champion by Mark Minaveri. I just love this book. I had to get out my highlighter. It had so many good passages and thoughts and uh, encouragement that I had to highlight them. One of the things he talks about is a monthly tracker, and I've been doing some variation of that, but I've added on based on his tracking that he does, and I'm going to create a weekly tracker as well. The ideas in his book will help me with the refinement of my sell rules and also help with the development of my buy rules. And I just got delivery of his other book. I haven't started it yet, but I'm excited to get reading. That one is Trade Like a Stock Market Wizard. Here's a variation of the monthly tracker that is shown in Mark Minaveri's book. I'm going to also track this. I have a weekly tracker as well. And for me, I think it's important to both look at the data by the purchase month, which this one is, and also the sold month. I also looked at my overall stats and put in what I would like my 2019 minimum goals to be. So I have my average gain of 35%. I want to keep my average loss down to around 5%, and my win-loss ratio, which I'm looking for. So time will tell. Last week, my investment goals for the week were to develop a watch list, which I did, watch the stock market every day, looking for a rally and follow through day, which I did. And then I was going to buy a stock if the market turned to confirm uptrend. But based on that analysis earlier on in this video, I don't think I need to wait for confirmed uptrend. I have my watch list. I am working on my rules. And if one of my stocks that I'm watching hits a valid buy point, I'm going to go ahead and buy it. And then I'm going to further develop my buy rules. And when I have something substantial, I'll be sharing those with you. I do know that I'm not going to wait for the market to be in confirmed uptrend. And I do like the one rule to buy only when I have time to document my purchase and set my stop loss. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell if you want to get alerts when I post a new episode.